Good morning and a warm welcome to all of you, and a particularly warm welcome to our speakers, Ambassador Chilcott, Robert Watt, Derval MacDonald and Shane Coleman. We're delighted that you've joined us this morning. First of all, looking at the methodology, the Trust Barometer is the largest global study of trust. We look at trust in the institutions of government, business, media and NGOs. In Ireland, we sampled 1,000 people, and we've segmented our survey this year into two groups. The first group we called the informed public. That group is the top income earners in the country. They have a disproportionately higher interest in public affairs, public policy and politics. They have a higher interest in media consumption, both business and news, and they're educated to degree level or higher. First of all, looking at why trust matters. Trust is the most intangible of assets, but it has very tangible benefits. People who trust a company are more likely to buy from that company, they're more likely to recommend the company, and they're more likely to pay a premium for its products and services. Trust is also an asset in the bank at a time of crisis. Companies that are facing into a period of turbulence are more likely to be forgiven and more likely to be defended if they're trusted. Looking at the findings for 2016, and if I can first bring you back to last year when we unveiled the 2015 data, we saw an absolute evaporation of trust across each of the four institutions. This year, I'm glad to say, it's a much more positive and optimistic story. We see a very strong recovery in trust globally, and we also see a strong recovery in trust in Ireland, particularly amongst that informed group. Trust has increased, their trust in NGOs has increased by 12%. In business and media, it's gone up by 13%. And for government, it's gone up by 15%. Obviously, good news for government on the day that we expect the election to be called. I should say here that when we look at government, we look at the elected government, but we also look at the system of government. And I know Robert has spearheaded a public sector reform agenda over the last number of years, so I'd be very interested in Robert's perspectives during the panel discussion on the extent to which that reform agenda has influenced these numbers. We're looking here at a 5-year trend on trust, and globally trust is at a 5-year high. If you look at Ireland, we have to go back to the pre-crisis days of 2007 to see similarly high levels of trust. What you're also looking at here is the difference in trust for each institution between the informed public, that more affluent group in society, and the general population. And if you look at the years 2014 and 2015, there was a convergence of trust between both groups. It was as if all our fortunes were tied together. That's changed in 2016, and we see a higher level of trust amongst that more affluent, media-aware and politically informed group. We call this the inequality of trust. It's not just an issue that we see in Ireland, it's a global phenomenon that we first began to see in the 28 countries that we survey in 2012. If you look at the gap globally, it's about 12 points. The country with the highest trust gap is the United States, closely followed by our nearest neighbour in the UK. If you look at the picture for Ireland and we go back to 2012, the gap was 8 points. It's narrowed somewhat between 2013 and 15, and again the gap increased in 2016. And if you consider what's going on around us from an economic point of view, we see very strong economic growth last year of 7%. Just yesterday we've seen very strong exchequer returns, good unemployment data, and other indicators like retail sales are quite strong. But we'll all be familiar with the narrative and the commentary around a two-tiered economic recovery, and I think what we're seeing here is a two-tiered recovery in trust. Trust is also linked to income inequality. What you're looking at here is a comparison between the top income earners and the bottom income earners and the trust gap between them. The trust gap is most pronounced in the US. There's a 31% gap. If you look at Ireland, the gap is about 10%. Overall, what we're seeing is a double-digit trust gap between high-income earners and low-income earners in 2/3 of the countries that we're surveying. That begs a key question: how is that trust gap closed? And we see a very strong opportunity for business to bridge the trust divide. We say that for a number of reasons. One, if we look at both the informed public group and the general population, the highest increase in trust of the four institutions amongst both groups is recorded for business, and business is fast closing in on NGOs' long-held position as the most trusted institution. Business is also most trusted to keep pace, so we asked people which institution do they expect to adapt, evolve and innovate in response to changed circumstances. And business recorded, again, the highest level of trust. In fact, in 21 of the 28 countries that we survey, business is more trusted than government. The other reason that we're optimistic on business as an agent of change in terms of the trust divide is we see a rise in the credibility of CEOs and boards of directors. This chart looks at the most credible spokesperson for an organisation. For CEOs, we see a 12-point increase, and for boards of directors, we see a 13-point increase in credibility. So what we're looking at here is a very strong leadership opportunity for business. We're of the view that business is being given a mandate to drive change. If business is to accept that mandate, its focus can no longer be exclusively on profit and on the bottom line. We know that profit and financial performance is important to investors and shareholders, but it's not the criteria against which the general public are deciding whether they trust an organisation or not. People are trusting, they're just making that decision based on four criteria: the actions that a business takes, its perceived values, how it treats its employees and what those employees say about the company, and how and where the organisation engages. And I just want to look at each of these factors in a little bit of detail. When we look at the actions that a business is expected to take, 8 out of 10 Irish people expect a company to take actions that both deliver financial performance and profit, but also we're expecting businesses to take action that positively impacts socially and economically in the communities in which those businesses are operating in. And we have some very good examples of businesses that are doing this quite effectively. Edelman, our Starbucks is an international client of Edelman. They have made huge commitments around addressing access to education and training and in addressing youth unemployment. If you also look at a company like Unilever, they've made very strong commitments in terms of sustainability, addressing climate change and combating poverty. And a pretty frequent statement from the CEO of Unilever, Paul Pullman, is that businesses can no longer be a slave to shareholders. What's interesting about both of these companies is they're addressing these issues not through bolt-on CSR programs that sit in isolation of everything else. They're making these issues core to their day-to-day operations and core to their business strategy. So in other words, what we're seeing with these organisations like Starbucks, like Unilever, they're prioritising profit, but they're also prioritising purposeful action in society. And organisations that are prioritising both purpose and profit are operating with a significant trust premium. CEOs must also lead from the front on both purpose and profit. We expect, 3/4 of us expect CEOs to be visible around financial performance, but actually a higher number of people in Ireland want CEOs to be active and engaged on societal issues. And in Ireland, the top two issues that we expect CEOs to take action on are income inequality and access to training and to education. So it's interesting when you look at business, you know, we frequently hear about the appropriateness of state intervention in business, either from a political point of view or a regulatory point of view, but there's very little commentary around the role that we expect business to play in society. And clearly what we're seeing in terms of the data is that people expect businesses to make returns for shareholders, but increasingly we're expecting businesses to make returns to society. Not only do we expect businesses to make returns to society, but we're also looking for a different type of leadership from business. We're looking for values-led leadership. This chart shows 16 trust-building attributes for CEOs ranked by importance. In Ireland, the most important attributes for a CEO to display are integrity and engagement. But if you look at performance, only 17% of the general public believe that Irish CEOs are operating with integrity. Now, when you look at it, we think that's more of an issue around communication. Obviously, the vast majority of CEOs are acting with integrity, treating their employees well, operating in an open and transparent way. And I think probably what we're seeing here, the sins of the few are impacting the good work of the many. Personal values and the history of a CEO also matter in terms of trust. I think at times CEOs feel duty-bound to focus all of their communications on operational and financial performance. 3/4 of people we surveyed say they want to know the personal values of a CEO. They also want to know their backstory, the obstacles that they've overcome, their personal success story, their education, and how it shaped them. I think a key message here is that we're looking for CEO communications. It needs to be authentic and it needs to be relatable to the stakeholders that a CEO is engaging with. The third area that we believe presents a strong opportunity for business in terms of bridging that trust divide is by mobilising employees as advocates for an organisation. We looked at a range of issues and we asked who was the most trusted spokesperson on those issues. So if you look at innovation, addressing societal issues, or dealing with industry-specific challenges, CEOs were the most trusted spokespeople. If you look at operational performance, the handling of a crisis, or the treatment of customers, employees were the most trusted spokespeople. So I think what we're clearly seeing here is that there's a role for CEOs to be advocates on certain issues. That means companies have to give over a certain amount of autonomy to employees. They must be equipped with information and they must be allowed to engage on behalf of the organisation. They are the strongest advocates and carriers of the corporate message, and they're a bridge in terms of engaging with the general public and addressing that trust divide that exists. Final issue or final area that presents significant opportunity for business in bridging the trust gap is around where and how a business engages. Looking at where a business engages, we're seeing some very interesting developments in media. We know that we can no longer rely on traditional media exclusively to carry our corporate message, albeit traditional media in Ireland is still quite trusted at 54%. Making sure that our content can be found through search is critically important. Online search engines remain the most trusted source of information. Two other findings which we found very interesting this year. One is the growth in trust of born-on-the-internet media companies. So in an Irish context, we're looking at journal.ie. In an international context, we're looking at the Huffington Post. Trust in those online-only media outlets has gone up by about 16 points since 2015. The other interesting finding here is the growth of trust in company-owned platforms. So a company's website, for example. Those platforms have surpassed social media in terms of trust. Second area we looked at on media was the most trusted authors of content on social media. And again, one interesting finding to point out here, companies, the content that a company produces is increasingly trusted. If you look at the third graph in, you'll see companies I use. Trust in content produced by companies I use has gone up about 20 points last year in 2016. And if you look at that with the stat that we presented on the previous slide, there's higher levels of trust in companies' owned platforms. There's also higher levels of trust in the content that the company is producing. And in fact, company content is more trusted than journalistic content on social media. What's the implication here? We see an incredibly strong opportunity for media, for business. Business no longer needs to go through media to share its message. It can go around the media filter and engage directly with its publics. And again, there's a very strong opportunity and role for business to play in bridging that trust gap by engaging directly with the public through its own platforms and through content that it is producing. In summary, just the overall trends that we're seeing here. One, we're seeing a recovery in trust right across the board. It's happening globally, it's happening in Ireland, and it's happening across the four institutions of government, business, media and NGOs. Second key finding is the inequality of trust. We're seeing higher levels of trust amongst a so-called elite in society. Top income earners are more trusting than the general population. The third and final finding that we're seeing from 2016 is the opportunity for business to bridge the trust divide. And for business to grasp that opportunity, we need to change the way we do business. It can't exclusively be about profit and the bottom line. Businesses need to build trust through the actions they take, through the values that they show, through how they treat their employees and what those employees say about them, and through engagement, where and how companies engage. Given the proliferation of media, today every company needs to act like a media company. And that concludes the 2016 findings. Thank you very much, and I'll hand back to Shane.